Hello guys and welcome to my YouTube channel. In this video we are going to be looking at volatility 151s, and this is one of the best pairs if you are struggling to master a strategy while practicing it on your real account. So it's one of the best pairs I would recommend because it is very slow and has a very low margin, so it doesn't require much. Even with the minimum lot size it might require something like maybe 15 cents or so. Doesn't require much a large margin, very small margin, and the pair is slow, right? So this is one of the best pairs. For example, let me just show you something so you will understand. One moment, let me get, this is not the minimum lot size. I want to get the minimum lot size for you. No, this is not the minimum lot size. Okay, I think that should be the minimum lot size. Okay, this is the minimum lot size. 0.001 is the minimum lot size. And now if let's say you take a trade at this point, and this is on the daily time frame, look at the profit. You can see the profit is just about $4.24, meaning the pair is very slow. It's not a volatile pair, so you can use it to practice a strategy on your real account. And the stop loss, even if your stop loss is just, unless you have a $10 account and your stop loss is here on the daily time frame, you see you won't even lose much. Even when the market goes against you, you can see you won't lose much. This is $1.86. So even on a $10 account, you can use, to build that confidence. If you have trouble, building the confidence to trade on your real account, even when you understand the strategy. So you can practice on this particular pair, which is very slow and requires very low margin, to master the strategy before you think of applying it on your before you think of increasing the lot size, because with this minimum lot size it will require very small amount of money, yeah, margin, and then you can decide to increase the lot size. Or once you've mastered it, you built the confidence, you can go ahead to trade on other pairs that are volatile, so you can make some good profit in the market within a short period of time once you find the setup. All right, so we are on the daily time frame, and I missed some trades on this particular pair, though I've been busy with other stuff and other pairs. That's one thing about opening too many, having too many quotes available, because when you keep on analyzing all the charts and you leave them there, you might end up missing some opportunities. That's why it's best to just stick to a few pairs. Once you open the chart and notice that the market, look at the pairs that can possibly give you profit or give you setups or entries, then you just stick to those ones. Remove the pairs, remove the ones that may not really be necessary for that day, so that I can focus on the ones that you'd want to work with. So it will help you to avoid some missing threads. All right, so now you can see on this daily time frame we have this movement. The market has been buying from this trend line. You can see where we place this trend line. That's a very nice setup, nice buy zone. So finally the market broke below this zone and started selling. You see the candlestick pattern, this candlestick that dropped. After this momentum candlestick that dropped, you see the subsequent candlesticks were not as big as this one. So you can see the market was dropping, and from this time frame you can see the market is actually creating a kind of a corrective impulse. So the market broke out of this trend line with a corrective impulse, and the market started correcting, like changing direction, buying to the upside, which we expect it would want to come and do a retest on this trend line. So now this is the daily time frame. We can always find an opportunity to enter the trade on a lower time frame if we can't find the actual setup on this daily time frame, because as it is, there is an opportunity around here. There's opportunity around here on the lower time frame. So if we go down to that lower time frame, let's say we go down to the 4 hourly time frame, you'll notice that we had, this is the corrective impulse I mentioned on the daily time frame, and we can easily draw our trend line to mark it out. We can easily draw our trend line to mark it out this way. You can just easily mark it out this way. Or even if you want to do something like this, let me see if this will work. We consider the lower highs the market has created. This can't work. And if we want to consider this one, this can still work, this can still work, this can work, as you can see. All right, so now the main issue there is this. You can see that the market went above this trend line after creating these lower highs and lower lows. You can see lower highs, lower low, lower high, lower low. The market bought impulsively, then broke above this trend line with a retest. This is a retest with this bearish candlestick. Then it still bought again and finally went above this previous high, the recent high that it created, this high here. If we put the crosshair tool, you can see there was a shift in market structure immediately at that point. There was a shift in market structure at this point. You can see it clearly. So we can easily put a trend line there, sorry, a horizontal line to mark that, where we had that shift in market structure clearly. Good. Now, and after there was that, after market swept this high, which is a shift in market structure, for those that do use that practice SMC, smart money concept, as ICT. This is a liquidity sweep. I guess they call it liquidity sweep. It swept liquidity here, and you see the market started selling back. So we, as people that master my strategy, if you've been following my strategy, you will know that once this happens, we know that something is cooking and we are about to eat some good food, guys. And this on the 4 hourly time frame. You can see after breaking out of this trend line and sweeping this high here, we expect a retracement, and you can see from the next candlestick that was formed, which is this bearish candlestick with a small body. I don't know how you call it, it's not important to me. You can see the market started selling nicely, and now you should notice that after the market is retracing or pulling back, if you call it so, the market is going to be buying from where it has bought previously. It's targeting where the nearest support zone, so it can, or key level, so it can really buy from it. So you can see what the market did. It got back to this level where it bought previously, and what happened in the market, guys. This is, you see, it bounced. The market closed, got to this level. Then the next candlestick wanted to sell, it couldn't. Started buying, closed bullish. Then it bought up to this level here. It went above this high, creating a break of structure. Went above this high, creating a break of structure. All right, so now, also, this sell opportunity is something you should have also gotten if you notice, though I did not get on any of this. That's why I have to explain, so that if you notice this on the chart, you should know that it's an opportunity to make some money. Look at the way the candlesticks, the bullish candlesticks, were buying to the upside. Look at, and suddenly it came up with this red candlestick, and there's wicks up here and down, all those wicks. So it means if you go down to a lower time frame, you would have found an opportunity to trade, because it looks like a corrective impulse. So we might, let's go down to the 1 hourly time frame and see what we can get from there. Let's go to the 1 hourly time frame and see if there was an opportunity. Guys, you can see there was actually an opportunity, because right here you can see the market started creating this chart pattern right here, and this, you see, the market created a low here. After that massive buys to the upside, then we can place this one right here, and this structure that we are seeing here at this point is a structure that can be more clearer if we look at it on the daily, on the 15 minutes time frame. Let me remove this line I placed the other time. Okay, let me just go down to the 15 minutes time frame so I can show you this thing more clearer. Okay, so now you can see that we have a corrective impulse at this point. This is a corrective impulse. Why do we call it a corrective impulse? We can see the manner the market is buying from here, and the way the manner the market is still buying. The market is bullish, and the market is still bullish, but there's a difference between this particular movement and this one we are seeing here. So this one indicates the market is all will possibly change direction, and if you understand my reversal strategy, you know that food is almost ready. Once there is a breakout like it happened here, and you see the proper retest that happened here. Let me bring the arrow line tool again to mark out where what I'm talking about. You can see market formed this pattern. This is a rising wedge, I think they call it so, an ascending wedge. Then the market from this point sold and went below this low, the recent low it created, which is actually now a change of character now, or you call it a shift in market structure. Then the market came down and started buying back to this same zone where it has been selling previously. You can see the market has been selling previously from this zone, and you see the nice sells. See the nice sells to the downside, guys. Nice sells to the downside. Now, if you are practicing, if you're trying to master this, maybe a strategy, like say this, let's say this strategy, and then you have a very small account size, you can use this to enter your trade at this point and see how much you possibly make. You can just use this to enter a trade at this point. Maybe you enter the trade on the maybe because maybe you go down to 15 minutes time frame, you will see other confirmations that will tell you the market is going to sell. I won't have to, I don't have, I can't explain everything right here to tell you why you should enter a trade at this point, but know that this is actually a sell zone, so you can easily enter a trade at that point above that zone. So now let's see, you enter the trade with a losses of 0.01 on this pair. Guys, look at your, and you allow it to get to the base of this pattern, then your profit target is going to be what? 50 cents only. And even if you set a stop loss above it, and the market, let's say it came up and got to this your stop loss, you only lose about 9 cents. You see the beauty of using this particular pair to trade, to practice on a real account. So by the time you do this and you are seeing those little profits consistently, you will then be able to increase your lot size. You can easily come here and change your lot size to maybe 0.05, and you see your profits will start increasing. Now it will be 2.52, or by the time you get to 0.1, you start seeing more profit, guys. So but you can just practice with that minimum lot size until you are confident enough to be entering trade with a reasonable lot size that will give you good profit. Because I have to tell you the truth, to make money trading, you need to have money. Yes, need to have money. That is a good account size, so that once you find an opportunity, you go in and make the money that is available and you get out, instead of struggling with them those little accounts that and you may not even be able to hold the trades for long, or sometimes because of the small nature of the accounts, you do not have enough funds in your account, so you would want to hold trades so that you can make a good profit, or you want to open multiple positions so they can make good profit, you know. So, and at the end, the market sometimes misbehaves and you are in deep losses, or you blow up the account. So, but if you have a good account size and you see a very good setup, guys, just a few candlesticks, you make some good money. And even when you close the trade, some take some partials and allow the rest to run, you make some good profit on a regular basis. Nothing less than $100 to $500, depending on your account size, even $1,000 a day, guys. All right, so you can see where the market sold from. This is a nice opportunity. Then the target would have been this based on our strategy. The target would have been this based on this time frame too. Your target would be this. But if you remember what happened, what you had on the 4 hourly time frame, you will know that the market will likely sell to where it got to, which is this base here. I mistakenly deleted that arrow line. The market will sell to this particular point here, based on what we saw on the 4 hourly time frame. You see, on the 4 hourly time frame, was it yeah, or the 1 hourly time frame? Let's look at the 1 hourly time frame. You can see, so you would expect the market to sell down to that point and you make some good profit. You make some good profit. All right, so let's say you missed that opportunity. Let's say you missed that particular opportunity. Then let me delete this arrow line now and also remove this one too. I want to show you that even with the one particular pair, you can be getting good setups and profit at least maybe 3 times in a week, and then you make your profit and leave the market. It is not a must that you trade every day. You must not trade every day. There's no rule that you must trade every day. All right, so now look at this. So what we have here on this 4 hourly time frame, after the market sold to where it started buying. If you go down to the 1 hourly time frame, let's look at what we can get there. You know that this actually is zone the market has been buying from previously, and we would expect the market to actually buy from here. But on the 4 hourly time frame, what the market did was it just landed, it closed the market 4-hourly candlestick closed bearish on that particular zone. So immediately the next, and there was nothing to tell you, okay, you can enter a trade immediately. Even on the 1 hourly time frame, there was no confirmation the market was going to start buying immediately. So you wouldn't have entered a trade immediately. And even on the 15 minutes time frame, let me check if there's anything that would have warranted an entry. Okay, so the only thing the market did here on the 15 minutes time frame is this: it tried to sell correctively, like a corrective impulse. You see, after it sold up to this point, started giving us this, but there was no the market never bought above this, because there's a little trend. You can place a little trend line right here, then wait for the market to break above it, then you look for an opportunity to buy. Since it did not happen, so you wouldn't have entered the trade. So meaning the what we have down here wouldn't have mattered at all. But you can see still on this time from the market then later bought above this zone and went up. And the market, on getting to this point, gave us this particular chart pattern that indicated it was still going to buy. This particular chart pattern here, guys, lest I forget, if you're watching my video for the first time, please subscribe to this channel, like this video, and share your thoughts in the comment section. Guys, just encourage me. When I see your likes and your comments, it gives me more energy, the energy to do more videos like this that will help you succeed in your trading journey, guys. And also, there's a link in the description of this video. It takes you to my Telegram channel. From there you can find my direct contact if you would want to enroll in my one-on-one mentorship. And also I share some valuable information there on that Telegram channel once in a while, so you wouldn't want to miss, or to not join that Telegram channel, guys. So join as soon as you can. Meanwhile, let's continue with this video. You can see the pattern the market created. The market created this pattern, and the same thing I explained why the market was forming this pattern here. We saw this, and the market never bought above this pattern, so we couldn't have an entry at that point, until the market continued selling. The same thing happened here. The market started creating lower lows, and you can see it broke above this trend line and then went above this high. See, it came back. There's a kind of a change of character immediately. So it came back to this zone and started buying immediately. Guys, see the massive buys to the upside. See the massive buys. So based on what we are seeing on the higher time frame, we expect the market to continue buying. But right now, on this time frame, the market is selling. So we can easily put a trend line and just follow the market. Whatever it's doing, we follow it, guys. We follow it. We place our trend lines here. We try to duplicate it to see what the market is going to do, you see. And if the market, once we notice that the market will start buying, or if it's keep on selling this way until it gets to a strong support zone, then we should expect the market to start buying. We should expect the market to start buying, and once it starts buying, we expect it to buy above this trend line and continue buying to the, above this trending resistive trend line, and continue buying. Because on our 4-hourly time frame, what we are saying is the chance that the market can continue buying. There's a change of character here. There's a break of structure, and the market might be coming back to retest this trend line. So until that happens, mind you, everything is a prediction. Until it happens, then it is real, or it is true. So based on my understanding of price action, there is a chance the market can start buying, can continue buying, and go above this particular zone, this trend line. And because of this pattern that we are having here, if you've been following me, you understand that this particular pattern, once we see it, it signals a change in direction. And that is a change in direction like this, or a continuation. Yes, the market wants to continue buying. It bought impulsively, so it wants to continue buying impulsively. It wants to continue buying. That's what I'm saying. So there's a chance the market is going to do something like this. We want to see something like this. We want to see something like this to the upside. And if we go down to maybe 1 hourly time frame, we'll see where we are. Okay, let me go to the 4-hourly time frame. You see, it's almost close to where we have the trend line. So the market will be buying, but not immediately. We just have to follow it up until the market gets to where a strong support zone. Then it will start buying, and once it starts buying, it will go far above where we have this trend line, and the target should be here. Meanwhile, if you ever find that opportunity, I don't know when you're going to be seeing this video, or whenever you find a setup like this, guys, Don't forget to take your first profit at this point. Take your first profit where you have the top of this trend line, the top of this pattern here. Then you can allow the rest to continue running, and you keep on adjusting your stop loss till so that you never get back into losses if the market decides to go the other or the opposite direction, because we cannot trust the market, guys. All right, so that's just it. The video is too long. I never expected it to be this long, but I just believe I've been able to share some value to you if you've watched this video up to this time, and I believe this will help you in making some trading decisions, all right, and also understanding some market movement and sentiment when you see them on the chart. All right, guys, so till my next video, stay blessed and peace out.